Summary of Trump's economic strategies. During President Trump's tenure, his economic policies aimed to stimulate growth and boost American businesses. His administration's focus on tax cuts, deregulation, and trade policies was designed to enhance domestic industry. A key element of his economic agenda was the Tax Cuts and Jobs Act of 2017, which lowered corporate tax rates and offered individual tax reliefs. This legislation was intended to increase disposable income for Americans and encourage investments in various sectors, including real estate. By alleviating the regulatory burden, the administration sought to foster a more business-friendly environment, potentially impacting the housing market. Trump's economic strategies also involved significant trade policy shifts, including renegotiating trade agreements and imposing tariffs on certain imports. These moves were aimed at protecting American jobs and industries, but had varying effects on the economy. While some sectors benefited, others faced challenges due to increased costs and trade uncertainties. Additionally, the administration's focus on deregulation extended to financial and environmental policies, aiming to remove barriers that hindered business operations. The overall approach of Trump's economic policies was to create a landscape where American businesses could thrive, which indirectly influenced consumer confidence and spending. The intersection of these strategies with the housing market created a complex environment where tax incentives and reduced regulations played a role in shaping market dynamics. This approach aimed to provide a boost to the broader economy, which in turn had potential implications for housing demand and investment. Mortgage and interest rate dynamics. The Federal Reserve played a crucial role during Trump's presidency in shaping the mortgage and interest rate landscape. Initially, the Fed raised rates in response to strong economic indicators, but later shifted to rate cuts to support continued growth. These changes in interest rates significantly affected home affordability, as lower rates typically make borrowing cheaper and can lead to increased home buying activity. Trump's calls for lower interest rates were aimed at stimulating further economic growth, but these changes in policy also led to increased volatility and uncertainty in the housing market. The dynamics during this period led to more favorable conditions for buyers looking to enter the market. Trends in the real estate sector. During President Trump's administration, the real estate sector witnessed significant changes in housing demand and supply. Urban regions experienced heightened demand, fueled by economic growth and job opportunities, leading to increased competition and higher home prices. Conversely, rural areas faced slower demand growth, but pricing remained more stable compared to urban hotspots. The administration's economic policies, aimed at spurring overall development, had varying effects on these trends. The construction sector, in particular, saw a boost as the need for more housing units in high-demand areas grew. However, the pace of new construction often lagged behind the rapidly increasing demand, exacerbating affordability issues in cities. While urban areas grappled with these challenges, the slower growth in rural areas presented different dynamics. The disparity between urban and rural housing markets became more pronounced, reflecting the broader economic conditions of each region. The administration's focus on economic development had indirect effects on these real estate trends, influencing where and how people chose to live. Additionally, shifting demographics played a role in shaping the market. Younger generations increasingly opted for city living, drawn by employment prospects and lifestyle preferences, which further intensified the urban demand. On the other hand, some segments of the population sought the affordability and quieter lifestyle of rural settings, adding to the complexity of the housing market under Trump's tenure. In summary, the real estate sector under Trump's administration was characterized by a marked difference in trends between urban and rural areas, influenced by economic policies and shifting demographic preferences. The resultant dynamics shaped the housing landscape in multifarious ways. Programs and incentives for homebuyers. Trump's presidency saw the continuation and introduction of various programs aimed at making home ownership more accessible. FHA loans, a long-standing government-backed option, remained crucial for first-time homebuyers and those with lower credit scores, offering lower down payments and more lenient approval criteria. Additionally, the administration introduced new tax benefits and down payment assistance programs to stimulate the housing market further. For instance, tax benefits such as the mortgage interest deduction continued to provide financial relief for homeowners, making the cost of owning a home more manageable. The administration also advocated for expanding programs that assisted with down payments, making it easier for buyers to overcome one of the most significant barriers to purchasing a home. These initiatives aim to lower the entry barriers for prospective home buyers, encouraging more Americans to consider investing in real estate. Veterans and active military members continued to benefit from VA loans, which offered zero down payment options and competitive interest rates, further supporting home ownership among those who served the country. These programs, combined combined with the broader economic policies of the administration, worked together to foster an environment conducive to home buying. International investment in U.S. property. During President Trump's tenure, international investment in U.S. property experienced notable changes, influenced by a variety of factors. The administration's trade policies and international relations impacted foreign investor sentiment, creating a mixed environment for those considering U.S. real estate. Increased tariffs on certain imports and a more protectionist stance led some international investors to reassess their positions, while others remained attracted to the relative stability of U.S. property markets. The shifts in geopolitical landscapes under Trump's administration played a significant role in shaping foreign investment patterns. Investors from countries involved in trade disputes or facing higher tariffs often showed caution, waiting for clearer policy directions. On the other hand, regions with strong diplomatic ties to the U.S. saw continued or even increased investment, driven by confidence in long-term economic partnerships. Additionally, the strength of the U.S. dollar during much of Trump's presidency had mixed effects on international buying power. A stronger dollar made U.S. properties more expensive for foreign investors, potentially dampening interest from some markets. However, for investors seeking a safe haven for their capital amidst global economic uncertainties, U.S. real estate continued to be an appealing option. The long-term effects of Trump's policies on the housing market will likely manifest in various ways. Continued tax reforms and reduced regulations could sustain economic growth, which may boost housing demand. However, the potential for rising home prices, especially in urban areas, could intensify affordability challenges. Industry stakeholders will need to address these concerns through innovative housing solutions and policy adjustments. Additionally, demographic shifts, such as the increasing preference for urban living among younger generations, will influence market trends. The rental sector may also see continued changes, with remote work potentially driving demand for suburban and rural properties. Future policies should aim to balance these dynamics to create a stable and accessible housing market. As the market evolves, both buyers and investors must stay informed about policy changes and economic conditions to make strategic decisions.